with that perspective. The market, by the way, is up 23 points. 18,536 is where we are at. Najib.
Well, all right, let's move on then. Metro Brands, they posted a good quarter, on a low base, but the performance is lower sequentially. The company also opened close to around 28 stores, in the first half, but they're on pace to open close to around 260 stores in the next 3 years or so. To understand more about the company and the path ahead, we're joined by Mr. Nissan Joseph, the Chief Executive Officer at Metro Brands. Hi, Mr. Joseph. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, you've opened close to around 48 new stores in the first half of the year. Could you tell us, for the second half, quarter 3, quarter 4, how many new stores will you open? And also, quarter 3 is a very important, quarter for you. Could you tell us how is demand on ground? How are things shaping up?
All right. Well, good morning, and thank you for having me. As you mentioned, we are up to almost 50 stores in the first half of the year, and we believe that pace will continue through the rest of the year. So we should close out the year somewhere between the 80 to 100 range, which would put us on pace to hit 260 stores that we said we would do in the first 3 years after listing. As far as Q3 goes, we continue to have sales that meet expectations. Don't forget, we're all lapping big sales from last year, simply because COVID had finally given up and people were out shopping. There was a little bit of pent-up demand, wardrobe refreshers. But now that we're lapping that, we're happy to see that demand continues to remain consistent against our expectations.
Mr. Joseph, hi, good morning. Any segments, any particular price points seeing any stress out at all, or none at all?
Yeah, I think we were pleased to see that our segment over 3,000 rupees had grown considerably, which speaks to the premiumization that Metro is pushing towards, and speaks well that the consumer is willing to adapt their buying habits to where the prices are going. We did see some pressure on those below 1,000 rupees, primarily because there was a 700-point GST raise, 700 basis point raise in GST in that price point. But the good news, we'll be lapping that as well in the next few months. So I think a lot of the good news is, while nobody's going to see those bang up numbers like we all saw because we were going against truly not comparable numbers, I think we're seeing business normalize. And as it normalizes, we're pretty pleased to see where it's settling into.
You recently, or just last month, you made an acquisition where you will acquire the company which owns brands like Fila. And this will be a big strategic addition to your portfolio because historically, Metro wasn't big in offering sportswear. Could you tell us your plans? What was the revenue contribution currently? How much can it scale up to?
Yeah, so today, we just acquired Fila, and we've identified that sports was a big white space in our portfolio of brands. So we're quite excited about getting a global brand as Fila that plays across different genres of, whether it's sports or lifestyle, quite comfortably, and athleisure. And all of these are very important to the Indian consumer today. We know that the business is about around 100 crores that we acquired. But we also know that, as with every acquisition and merger, there has to be a period of integration that we will go through. And everything we do at Metro is with a long range perspective. So we're really looking at, how do we set the brand up for the next 5 years, taking into advantage our ability to run exclusive brand stores and taking it to the fact that we have 400 multi-brand stores that currently sell a lot of major athletic brands in India.
All right. Mr. Joseph, Cravatas, the one that you all acquired, and by the way, I was a big Fila fan, I recall when I was growing up, good brand out there. But if you could tell us, from around 150 crores that it was doing on an annual basis, say in the next 5 years, as you were talking about a 5-year vision, where do you see this number headed? Point number one. And the second factor is your focus on premiumization. How much do premium brands contribute as a percentage of your revenues, and how is that likely to change?
Yeah, so I don't think it's a question of premium brands. I think it's a question of premium price points first and foremost, right? Because I would like to believe, I would like to know that all our brands that we sell are premium. However, some brands have, your typical opening price points, your good, better, best price laddering, right? So everything we sell is premium in that space that it operates. So we're quite comfortable with that. As far as, what is the potential for a sports brand in India, I think is the way I would look at that question that you're asking. We do know that The other peers in the Fila space today operate somewhere in the neighborhood of 300 exclusive brand stores. We also know that they do, a couple of anywhere from 1,000 to 1,500 crores in revenue. So, these are all vectors that we will carefully consider as we lay out a plan that, in typical metro fashion, is going to grow, in a way that is hungry but not greedy, in a way that is thought out and thoughtful.
Okay. Could you also, you said that, for you, the Fila deal, just coming back to that, it's a 5-year plan, right? Could you tell us what is the 5-year plan? What is the aspiration that you have? We have the current revenues. I think it's close to about 150 crore of the brand that you've acquired. How much do you think you could scale it up to? How many EBOs, exclusive business, outlets that you are planning to launch for Fila?
Yeah, I think the vector that we would consider is, what are its peers doing in the industry today, in the market today? And, like I was mentioning, Rima, there's most of the peers in its space of Fila operate about 300 EBOs. They do somewhere in the 1,000 to 1,500 crore range. I mean, these are vectors we would consider as we plot our roadmap for the next 5 years.
You said premium sales is, maybe 2,500, 3,000 rupees per pair. What do you, what's your range that you look at?
Yeah, no, we would say anything over 4,000 is
4,000. So how much does that contribute as a percentage of sales? More than 4,000 rupees a pair?
Yeah, we don't break it out too much, but I can assure what we're excited about in the last quarter was the fact that our price points over 3,000 grew the fastest in that segment.
So I asked you that query, but I don't think you'll disclose those numbers, or you don't have that handy as of now. So maybe the next time around, we could get further clarity on that. Final question, putting everything together, price increases, input costs, sales ramp up, change of mix, margins at around 30-31%. Do you think you can hold on to it? And what do you end this year with? That's FY23 in terms of revenues. Very quickly, sir.
Well, I think there's a lot of forecasts that the analysts have put out there that I wouldn't care to comment on, but I also think that, none of those forecasts are so unbelievably unreasonable. The 30-31% on EBITDA margins is something we always guide to and feel very, very comfortable with that number. We also believe that our path will guide to north of 15%, like we've always guided. So we see no reasons for this quarter to upset those two numbers.
All right. Thank you very much, Mr. Joseph. Appreciate you joining in. Good luck. And thank you, as always, for your time here on CNBC-TV18. Thank you. We'll take a quick break here. We'll come back on the other side. Mitesh Thakkar will be joining in for some technical trading ideas.